everyone. Welcome to the latest installment of MSP Business School. My name's Brian Doyle.
I'm Tim McNeil.
And I'm Robb Rogers.
And Robb Rogers is damn glad to meet all of you. So,
that's right.
With that being said, we're excited today because it's very quickly became that time of year again. As many of our listeners may or may not know, we like to bring Abe Garver back from Focus Investment Banking about every 6 months to kind of bring us up to the date on the state of mergers and acquisitions out in the marketplace, what trends we're seeing, what things are changing out there, any great stories he may have for us to share. So we always get excited when Abe joins us. And for those of you just listening audibly, Abe's got a really cool green hat on today. It says EBITDA. So, he's making sure you keep the focus here, right now on what the eye on the prize is.
We have a Focus MSP team on the EBITDA hat. These are hot off the press, and we're about to make 100 of them. And
I'm more impressed the green hat isn't getting lost in the green screen.
Yeah, right? Yeah.
But with that, how you doing today, Abe? Thanks for joining us.
Really great, really great. And we were thinking about kind of for this discussion, kind of covering three topics. One, I just had a lunch with IT Nation Evolve peer group member that lives relatively close to me, and I think their journey and their questions could be in kind of that lunch conversation, summarizing kind of some of the key points out of that lunch conversation could be really helpful to a lot of the listeners. We're fortunate to be, to work on transactions all the way from, I think our smallest has been enterprise value of 7 million. All the way up to we were selected on an assignment by one of the world's largest asset managers to help them find an MSP with a minimum of 25 million of EBITDA. So kind of that whole, so would love to give, kind of listeners just an update on the overall market in each of those kind of pockets. And then third, IT Nation Evolve, coming up at the first Wednesday in August, or actually the 9th of August in Denver. And IT Nation Evolve, for those that don't know, it's really the, kind of hands down, I think, one of the best peer groups for MSPs. And we've had, I've been involved with, have an example of one that's grown from a merger of equal that got it to 2.5 of EBITDA all the way to 30 million of EBITDA in the span of 3 years. So that's kind of an empire builder example. There's Evolve has uses something called modes theory.
Oh yeah.
And you can kind of, say, here's here's kind of our aspirations, and here is the toolkit and kind of resources and community to help you get there. So there's what's called a community day on Wednesday, which is in between when half of the peer groups meet Monday, Tuesday, the other Thursday, Friday. On that Wednesday, coming up in Denver in August, there's an open invitation. ConnectWise would love to, and the IT Nation would love to bring in any MSP kind of founder, CEO kind of person running or responsible for running the MSP to Denver and have you, join us, kind of meet the community and learn more about it.
And that's regardless of platform too, right, Abe? So you don't have to be a ConnectWise customer. You could be utilizing any of the platforms if you're looking to come in and understand how high functioning peer group really operates and what the opportunity looks like. So that's exciting.
Yes, yeah. So enable also Autotask, kind of Kaseya MSPs. This is I call it non-denominational on the PSA operating system. These are peer groups for the IT Nation, kind of peer group leaders who are go-givers wanting to help you as an MSP owner kind of grow your business.
Very cool.
Nice. Okay.
I love when the community can come together and put down the product side and the parochial nature of that and really look at the betterment of our community, similar to what the information sharing organizations do, on the security side, where, all those vendors have come together and said, hey, we gotta take care of each other. It's better for all, right? And it's a similar process here. So looking forward to hearing in our next time we get together what that was like, Abe.
Yeah.
Yeah, awesome.
Yeah,
So I'm
that'll
gonna
be right around
give,
the same time.
I'm just gonna give a visual for those that are watching, and then jump into the lunch conversation. But I think, just kind of for context. So at this point, we're, kind of 3.5 years into this land grab, and Focus is fortunate to have been the catalyst for and advised on MSP transactions with 73 parties now. The most recent was a 15 into one MSP Corp, 15 MSPs into one merger MSP Corp in Canada, just announced about a month ago. And it includes we've advised on 11 platform investments. So the private equity group's first investment into the sector, and then they go on to do add-on acquisitions and then recapitalize. And interestingly, 7 of the 11 have been mergers of equals. And at this point, we're at about 125 PE-backed MSPs. And, kind of as they're held for 4 or 5 years, they end up going into, they outgrow their current investor. And so there's kind of a neat life cycle associated with a lot of these investments. So that's kind of context, but I had a really, really neat lunch today, and Couple owns the MSP, about 3 million of revenue, and kind of they set the lunch up, and I got to know them through the Evolve peer group. I spoke in there, did a lunch and learn when their peer group met in one of the cities that's held, and they asked, kind of, if you're in our chair, what do we do? Do we grow organically? Do we, I know you're an M&A guy. Do we grow by M&A? What do you recommend? Like, here's about our business and what should we do? And, I just love, being right on the front line of all this stuff. I love that question. And just kind of, so I immediately said, it's really helpful, this modes theory, because modes theory, understanding kind of where you are in the journey. Are you kind of a startup? Are you a balance builder? Are you a value builder? Or are you an empire builder? And it's kind of a way that all of us can speak to each other in the community and kind of with one word say, if somebody says they're an empire builder, I know what their aspirations are, or a value builder. And I had an aha moment last week in Orlando, and the observation was made, hey, you can also be thinking about modes theory with your customers. So a value builder may not want to be out there trying to attract empire builder customers that not are MSPs, but whatever business they're in, because there's a disconnect of the demands that they're going to have as they're growing at that accelerated pace versus if you target customers that are kind of on that same, kind of in that resonating in that same area, there's actually better alignment.
Yeah. So, like, just to jump in here real quick, for anybody who's listening, the modes theory is a very smart way to understand who you are and who your audience is. I took the modes theory assessment, and anybody can take it. Just go to Google, type in ConnectWise modes theory, and it'll take you right to the assessment page, and you can take your assessment and kind of understand who you are as a business. But one of the things, Abe, that I found really beneficial about it was you can also have your leadership team take the modes theory, right? So like, if you're an empire builder and your leadership team is, on the value side, then, you have to understand where they're coming from, because even if you're an empire builder and they're not, you're still going to be at their speed, right? So that really, when I heard that, it really helped us out to understand what our leadership team was doing and how we could all get to where we wanted to go appropriately.
I mean, modes theory is just genius. It is because you can basically point the lens at exactly what you're saying, Rob, like point it at your employees and say, are you an empire builder, like at a personal level, like employee level, or are you a value or balance, or kind of where, kind of where are you, or what do you aspire to? And it also, it can kind of help you decide, well, maybe this isn't the right person for our organization, or maybe like, so really taking that lens with modes and saying, who are we as a business? Who are you individually, our employees? Do you match up? And then our clients, who are we going after? And I think if we're all very thoughtful in kind of where we, kind of self-identify, that can help kind of increase satisfaction across the board and kind of results.
Yeah. Well, and it's funny you talk about, the modes theory, everything that Rob discussed about how it can help you internally. I think you alluded to something, and it can actually be implemented into your prospecting, into your client deck. It can strengthen your client base.
Yep.
It can strengthen the client that you bring on. I think everybody who's listening here, we've all had a client that we brought on. We thought they were going to be good, but it was a swing and a miss for whatever reason. Right, running them through the modes theory can really help you mitigate that risk even more so, right? And when I heard that, to me that was very enlightening, and I thought that was an absolute genius way, another genius way to use modes theory.
Yeah, I totally agree.
It certainly has to accelerate your world, Abe, in the sense that, hey, realistically, a startup or a balance builder is probably not aligned with the mission that you're on. And, it's certainly somebody maybe to keep an eye on, but not somebody to, invest too much time into until they kind of make a decision that they want to move out of that trajectory or into the next tiers or stay as is. It's a pretty wild concept.
Yeah. So in the launch, starting with that framework, just modes theory, I was really able to say, here is, I believe in kind of riches and niches. Like, I said, back to the couple, kind of, let's really figure out what your secret sauce is here, what you really enjoy doing and are really good at, and kind of who your top customers are that you're doing that for. And organic growth is more valuable than M&A growth. I know I'm an M&A advisor, and I start off every presentation with, it's all about organic growth, and M&A growth is non-recurring. It's going to happen one time. You can find ways to make it happen more frequently, but let's really focus in on what's your special sauce. Let's double down on that, and let's get employees that are also helping you grow organically. And let's look for clients that are very much like your best clients and seek those out. So that was kind of one. And then I said, and we used the example of CMMC and their work in CMMC, and said, so from a, apologize for that, from a M&A perspective, then once we understand and kind of have the secret sauce and this great organic growth, if it's CMMC as an example, let's target doing M&A with MSPs that have 40 or 50% of their customers are in the manufacturing vertical. And there's a great kind of like linkage back to that.
Hey, Abe, I heard you say something there, and that I'm kind of curious about. You said great organic growth. What does that mean to you? Like, what is that number great, and what's the upper and lower bands on that?
Yeah, so the market for MSPs has historically been about 8%. And then for MSSPs, it's been double that, 16%. And so I've got, we have a 20 to 25 million revenue MSP that's done it we're advising on the sell side, a neat business that, it's really hard to get through 5 of revenue. It's hard to get through 10 of revenue, people work in the peer groups to exceed those numbers, kind of 10, it's hard to get through 15 and then 20. And so when I see an MSP that's broken 20 all organically, I love it. It's got a great organic, you can say it's got a great organic sales engine. This isn't a one-trick pony. It's got a process, and it's usually going to show pretty low EBITDA. Because it is investing in, it's reinvesting.
Yeah.
So it's not, I've got 5 million revenue MSPs that have the same EBITDA as that 20. And
Oh, wow. Okay.
And I would much rather buy the 20 that I know can go to 40, or I can turn the marketing expense off the 20, and it now makes as much money as the 5.
Yeah.
Like 4 times the 5 that's not spending any money on marketing.
No.
So organic growth that's repeatable, that's every investor's dream. Like, it reminds me of, we've had Willis Canty of Canty Tech, 9-time Inc. 5000 fastest growing, had not done M&A prior to his platform investment, and he's done some since. But that business is just phenomenal, because as the investor, even if we swing at some M&A and we don't hit it, this thing in its DNA, it's got great organic growth.
Yeah.
So my kind of comments to them were focus on, figure out kind of what the core is, who are your best customers, and let's go get more of those best customers, and then use M&A to kind of help complement that strategy versus just kind of consolidating.
So that brings a little bit of a question that to mind for me. When you say go after more of those customers, are you seeing that it's time to start looking at vertical shifting and getting, you said the reaches or in the niches, or however you termed it.
Riches and niches,
Yeah. Is it time to, for MSPs to really look where their top customers are and try to double down and go deeper with those types of customers? And as they're looking at acquisitions, to make relationships with customers that are with MSPs that are doing like-minded assessment, or like-minded, or is it still a revenue play that's really driving the outcome? Is there any advantage to being more verticalized?
I'm of the camp, and you see it, like I'm living it with my business. I'm of the camp of like riches and niches. When I go to win my next sell side or buy side assignment, it gets easier and easier and easier and easier the more that I've specialized in MSP M&A. And so my advice to every single MSP is like, it's fine to be vertical agnostic, but within each vertical that you've got, I really want you to build a business that you can win in that vertical, that you can win new logos. Like, it's all about winning new logos. And you do that by showing, like, Focus has 12 different industry verticals. And so there are other people in my firm that are coming to market the same way I am. We're all together, so we're industry agnostic as a firm, but we have deep expertise in certain areas. So my advice to MSPs is have deep expertise in any vertical that you're going to be in, and keep doubling down and tripling and quadrupling, because each time you get a new client and learn how to just serve them like in a wow way in that vertical, it makes it that much easier for you to go on and get the next one and the next one and the next one.
If you do anything else, you're speaking their language, right?
Well, I was just going to say that's something that we've seen more and more. Even 5, 6, 8 years ago, I think there was much more of I don't want to call it a shotgun effect, but there were more generalized MSPs, and it just seems like the tide has turned, and in a lot of MSPs now, they focus on 2 to 3 markets, and they own it. They become subject matter experts. They join associations in their local market.
Yes.
They want to be the ones. They want to be the MSP that somebody in whatever given industry is. They want to be the ones that they think of, right? And those are the ones I mean, I can tell you directly, those are some of those companies from our client that got acquired.
Yes.
So because they were so focused.
Yes. And that's really the key here, is just like riches and niches, and get in and pick something like for MSP, MSPs that are in certain verticals, like pick verticals you're passionate about and you love. I feel like it's a hobby. You would be spending your time there anyway. And it just doesn't feel like work. And that's because the investors want to see that this isn't a one trick pony. Like you did it, but you can keep growing.
So 2 questions, Abe.
Yeah.
First question, you've got, which kind of shocked me actually. You're more interested in 20% growth than a good profit, right? As long as they're reinvesting the profits appropriately into the sales and marketing engine, you're okay. The 20% is more important.
Like if I'm in the investor chair, when they really understand this, they are going to want the one that's 20 of revenue, that's 2 of EBITDA instead of 5 of revenue.
Wow.
Right.
And how many years back is that going for you?
How long have I thought that?
No. How long has it been? So, last year they hit 20%, the year before they hit 20%, but COVID, they were at 10, the year before that they were at 5, but they figured out the sales engine along the way. And so now it's churning, but they only have 2 years of trailing data to show it.
That's plenty. If you can show 6 months of data, like even 12 is great. You can turn something around. And it's interesting because you're not necessarily, if you're the person that builds the 20 of revenue business, and you keep reinvesting and reinvesting, and it's an awesome platform, you're not actually going to get as much as somebody who went and did M&A only, had 0 marketing expense. They did M&A only, they consolidated, they have low revenue and a lot of EBITDA. Right out of the gate, the one with a lot of EBITDA is going to get more value. And kind of one of our jobs is to put those 2 businesses together. So we now, for the new investor, we've got a founder CEO who's done a lot of M&A and integration. And we've got a founder CEO who's built 100% organically. And now together we have 2 great growth engines going into the future. And that's kind of state of the art. So that would be, we just did a transaction like that, ProVelocity and Iron Edge. ProVelocity had done a lot of M&A in integration, and Iron Edge had done a great job growing organically. And Riverside, that had invested in Logically, that raised a new fund and has made a new MSP platform investment. They're one of the easily, hands down, top 5 most sophisticated MSP buyers in the world, or investors. And they picked that. They picked somebody that was great, founder CEO, great with M&A and integration, founder CEO, great with an organic growth strategy. And they're both in the same peer group for 4 years. So they're also seeing, they know each other. They've kind of been in the trenches. They've challenged each other and kind of know, like, that's when these Riverside's funds $1.7 billion, and they'll make 10 platform investments. So you think about, they're gonna do 170 of equity, give or take. They need a pretty big MSP, and they just don't exist. And so the way they get there is this merger of equal. And that's why kind of 7 of 11 platforms we've done have been mergers of equals.
Very interesting.
Awesome. So, well, I know we're getting near the end of our time at this stage together.
Yeah.
So, I wanted to throw out there, Abe, if you had any other closing thoughts that you wanted to put out there. And certainly we encourage everybody to go out there, take advantage of Community Day, and go see Abe out in Denver with the ITO Evolve group and, get an understanding of what goes on in that group. But
Yeah,
anything
those
you'd
are
like to
always
close out with?
definitely those are always my out of my top 5 recommendations to increase valuation every year. Top 2 are always join Evolve, IT Nation Evolve peer groups, and benchmark with service leadership, which is part of also that kind of ecosystem. And those 2 things alone, like the benchmarking, will really help you very quickly isolate where are you different from somebody else? Where are you leaving money on the table? Where is there room for improvement? But everything, again, to me, goes back to organic growth. I think every plan every business MSP should start with, how am I going to grow organically? I wouldn't even open the door to your MSP until you've thought through your organic growth strategy. Like it is the critical cornerstone. And the 3 of you, like your expertise in organic growth, like I just really applaud it. Like it's so, every one of these MSPs needs it. And so maybe actually I'd turn it back to you guys. I'd love to, the 3 of you were recognized and are part of Pitch IT. Maybe just give a plug for how you all are helping MSPs and others kind of in the channel.
Shameless plug, Tim.
Shameless plug, Tim. Go for it, buddy.
Yeah. So from that standpoint, we have definitely seen a need, speaking a lot to what we just talked about in this episode, a need for that organic growth. And we feel like sales maturity has really plugged that hole and helped those MSPs, no matter what the size, right? Whether they're a single man show up to a $12 million MSP. We've seen it work with those 2 and everything in between. So it's a very systematic way to set up your sales process, set up a sales team, have it repeatable, sustainable, and give you that predictable growth that I think any MSP is looking for.
Yeah, I really appreciate and applaud your work for, on behalf of the community with it. It's like there's a lot of resources for like benchmarking as an example and operational maturity. And it's long overdue what you're doing with operational sales maturity.
Thank you.
So I'm going to throw in there for listeners that haven't, aren't reading between the lines. Robb and Tim, came out with a brainchild of a product called Sales Maturity, which is really kind of an on-demand sales coach that also looks at your finances and really helps growing MSPs who might be pre-peer group stage, pre-personal coach stage, but certainly in the bootstrap and organic growth phase, get that leg up and get that information they need to really build an organic sales model. And, all 3 of us bootstrap today in a variety of different ways. And, I've always looked at it as sales is just fuel to get to do the cool things like Abe talks about once we get to a certain size in certain inertia. So if you can't build a sales engine, you're always going to be going, well, I really want to get to that point when we can acquire a company, or I can entertain an exit, or I can do whatever. Because until you get to a certain size, none of that makes sense. And, if you're not figuring out an organic strategy to get there, you'll probably never attain your goals. So, the part that Abe was just sharing about the product that Robb and Tim, brainstorm birth child. And yes, I hang out around there too. But, what that they took to market was, was really, what made it interesting for us, even as, a partner to them, was, hey, this is really filling a gap that people have on day one at an affordable enough price that they should be able to go get it, go at it, and do it at their own pace. Yeah. And when we hear all about operational maturity level, there really is no sales maturity level equivalent. And that's what these guys are really trying to build now. So, Abe, thanks for the softball. We appreciate that. But,
yeah, absolutely.
But the truth is, it all ties to this conversation.
It does.
You can't
100%.
get into those bigger conversations that Abe will lead with you that gets you to the next, piece of promised land if you can't build an organic growth engine and sustain growth with it. It just won't happen.
Yep. All right, fellas. Well, it's been another
Great.
exciting episode. This has been a good one. I had no idea that investors were okay with a lower profitability if the engine is making up for it. It just like I just didn't get that. And
Makes sense. Never thought
it
about it.
does make sense. It
Yeah.
makes perfect sense. And I know examples, Tim, you know examples in your head
Yeah.
of people that sold
Yeah.
that just did just that and sold
Yeah.
at very high multiples. So, I mean, it just makes sense. But I will leave everybody with this. Go to ConnectWise, go to the modes theory, and take that assessment. Know who you are and what you are, and then be able to build plans around that. I loved it. I absolutely believe in it. It worked for me, and it worked for our leadership team as well. So with that, fellas, I appreciate it for today. And until next time, take care, everybody.
Yeah.
Have a great day.
And
Thanks for coming
August
on.
9th, August 9th in Denver, and mention you saw us on MSP Business School and you get an EBITDA.
There you go.
There you go. Get an
Get the
EBITDA
hat.
with an MSP
Yeah,
Business School.
there it
That's
is.
right.
Reference.
All right,
Awesome.
fellas.
Well, Abe, thank
Thanks
you
for coming on,
again.
Abe.
Thanks.